We have a question from Shauna who asks about today's upside bias for the Aussie dollar, US dollar, Kiwi dollar, US dollar, and Euro US dollar pairs, and asks whether we are still waiting for pullbacks or deeper pullbacks rather in these pairs, or whether we can trade them as they push through key resistance areas to the upside as well. So thanks for the question, Shauna. I think the question allows us to share some tips on using probabilities as well as evidence when looking for better entries in line with our biases. Now, when looking at these three pairs, all of them has one common denominator, right? Which is the US dollar. Now, our bias for the US dollar has been tilted lower since the start of June, if you recall correctly, based on a few different variables, of course, all of which are still very much in play. Now, the one thing we always need to consider for finding optimal entries is thinking in terms of probabilities. Now, even though our bias remains to the downside for the dollar right now, the recent move just from last week has barely had any meaningful pullbacks and retrace. It was just a big drop to the downside in one go. Now, there's no rule that the market has to wait for pullbacks before continuing with a strong trend. That's why trading in line with the trend is so important and so profitable. But we also know from probabilities that the market usually doesn't move in a straight line up and down. It usually oscillates, giving us opportunities to basically get back in at better prices. And what we try to do as traders, in line with those biases, is look for areas of value, basically being able to buy in lower and sell higher, basically looking for bargains on the charts. Now, there is definitely nothing wrong with trading these biases that we have today as the resistance levels break, trading them to the upside. There's definitely nothing wrong with that. But seeing how far these moves have gone already means the further they push higher, the likelihood or probability becomes higher for them to eventually have a little bit of a flush to the downside and a pullback. So that's the first step, thinking in terms of the probabilities of these moves going higher from here. Then there's also evidence. So looking at the evidence for something like the Aussie dollar, the Kiwi dollar, the Euro dollar, in terms of options markets, there's a couple of caveats that we can mention for that. So if we open up the options pricing for something like the Aussie dollar versus the US dollar, even though the bias remains to the upside, something like the Aussie dollar versus the US dollar, you can see from the breakdown of these option expiry levels, you can see the ratio between puts and calls is very even right now. It's very balanced right now, meaning there's both buying and selling interest at these key levels on the charts, low on the charts, especially coming in close to that 70-50 level. Now, that means buyers want to keep us above 70-50, but there's also an equal amount of sellers wanting to keep us below that level, which means we do need to have more caution when it comes to trading the Aussie dollar. Thus, waiting for a deeper pullback based on that evidence, especially coming down to that 71 and 70-50 area we marked out earlier, looks like the best opportunity from both a chart as well as a probability, as well as an evidence point of view. Looking at something like the Kiwi dollar, the options are looking slightly better. The biggest option expiry level for this week comes in at the 66.75, and we can see massive amounts of calls there. So lots of buying interest wanting to keep us above where we are right now. And then later the week, it dissipates into a more mixed picture. So looking at something like the Kiwi, then we can say, okay, we have a lot of buying interest coming in at 66.75. So should we buy from here? Well, arguably from a risk to reward point of view, with last week's resistance high sitting right on top of that level, arguably not, right? You would want to have a little bit of a deeper pullback anyway to re-engage this market. And then the buyers have interest to push the market up. And then you can obviously look to take it off close to that 66.75. So again, based on options, based on evidence in the chart and the probabilities, it looks like waiting for a pullback here is the best play to do. The euro also has very good options interest right now, with the balance firmly skewed for most of the contracts this week in favor of the buyers or call options, especially at that 1650 level that we marked out earlier today, coming in at that daily pivot as well. Now, even though the options are firmly skewed to the upside, meaning there's more buyers, the buyers should be happy as long as we're above 1650. It also gives us a possible area where pullbacks in the market will have vested interest to defend, right? So if we have eventually a nice pullback in the euro, we know that 1650 will be a key area where the buyers will want to defend in terms of those call options. Now, looking at this from a chart point of view, we've had a massive run to the upside, right? Looking at this market almost going vertical, even though the bias is tilted to the upside, you obviously want to be a buyer, but you wanted to be a buyer a lot earlier. And looking at this chart going vertical like this, the attractiveness for longs way up here looks rather diminished from a risk reward point of view once again. So again, it looks like the option for waiting for a possible pullback in terms of evidence, in terms of probability, in terms of the charts, looks like the best way to play this. Now, apart from that, chart evidence and the options evidence, we can also look at additional research. Now, something we highlighted, for example, in our top trading opportunities report this week, is something highlighted by Nordea Investment Bank that show that markets have been wrong-footed 4 times out of the last 5 times since 2012, when US dollar short positioning was as stretched as it is now, especially in terms of positioning versus open interest. Now, this, of course, doesn't mean the dollar must retrace from here. It just means that the evidence is mounting and growing in terms of probabilities to at least expect some pullback at some stage. So you see, we're looking at many different things here in tandem, from options interest to charts to additional research, all pointing for us to be slightly more cautious at these current levels to the upside. Of course, that will sometimes mean that you might miss further moves higher if you don't chase them from resistance breaks. But at these levels, I would rather be patient and get a much better entry than jumping in at these levels without seeing any decent pullbacks and then getting flushed on that entry to the upside. So we're not less bullish on these from a dollar point of view. To stress that point, we're just a little bit more patient, given the probabilities, given the evidence, and some of the additional research that we've been doing recently. So I hope that helps, Shauna, giving you a little bit of insight on what type of things you can use in terms of probabilities and evidence for finding better entries, especially with these moves that look a little bit extended.